Everybody. Thank you for joining us today. We're trying an experiment this week on our weekly live hour. We're going to be reviewing Facebook, aka Meta Platforms, earnings live. We thought it would be fun to show you the process that we go through step by step to review a company's earnings. Brian, I have done my absolute best to avoid all analysis on Twitter. I've done my best to avoid everywhere, so I don't want to taint ourselves to get reviewed, but I do know I did see last night that the stock was getting crushed.
Yep.
And I did see a quick headline saying it was Facebook's biggest one-day drop ever. So I'm wondering what happened either in the financial results or in the subscriber numbers, or excuse me, the user numbers, or what's going, or is it guidance? What is going on that's causing the market to react this way? Or did everything look fine and rosy, and this is just the market being the market?
Yeah, because that happens too, and I think that for me, this was a lot like if a Packer game happened and I couldn't watch it, and I wanted nobody to tell me anything about it, so I just avoided everyone. Like that's what the last 12 hours has been. But I'll say we picked this beforehand. This is not an opportunistic pick, but man, did we are terrible market timers, but we timed this one right because this is a video that I'm hoping a lot of people can help out.
Sure. So we're going to be showing you our process, how we go through earnings. Mostly it's going to be my process. I don't know if Brian does this exactly. And if you have ways that we could do this better, we're all ears. We're always looking to for ways to increase our efficiency.
And I was just going to say, and I'll tell you about all the things that Brian does that I don't care to do too. So you can make your choice because I'm certain that my process is probably shorter.
I care about Wall Street's estimates. You don't.
Nope.
Right.
Don't care at all.
So that's one difference between us. So, but let's go. This video is sponsored as usual by StockCard. And one thing I did note is if you go to the trending and then you do today's biggest losers, look what number one is. The biggest loser on the board today is down 26% today. So Meta Platforms. So we'll go to view it out.
And we're talking about a company that was recently worth $1 trillion that's losing. So it's $250 billion ish, probably less than that now, is wiped off.
Gone in a heartbeat. So I'm going to open up the company's investor relations website to get that going. You do see it's getting killed today, but if we go to key dates, you can see down here just one tip. So this is when the earnings date is. That's pretty cool to see. If you go down to stock card updates, you can kind of see any updates that are happening with the company right here, links to articles, things like that. So this is saying, and Topolis has a shrinking population. So I'm guessing we're going to discover that subscribers are on the way down.
And I'll also say one thing that's kind of neat too is it shows you Hoda has set up on stock card when the card will update. So it's updating today. So it's great. All the information is there for you now.
Right. Awesome. Okay. So the way that companies lay out their website is totally dependent. Facebook actually does a really good job, in my opinion. So let's see. There's the Q4 earnings release. Okay. Their slides.
They've even got their transcript.
They even have the transcript right there and a follow-up call.
Yeah, that's awesome.
That is rare. We'll show you how to do that either way. But I always like to get the most recent earnings report going. I also like to go backwards one quarter to get the Q3 earnings reports. That way we can see what we're looking for. So Facebook, I believe, is a company that gives guidance. So let's see.
They, at the very least, they give revenue guidance. I'm not so sure about earnings guidance.
Okay, so hopefully you can.
So this is, to be clear, what you have here is Q3. This is Q3, not yesterday.
Last quarter,
3 months ago.
So last quarter, they grew. Their revenue was $29 billion, and they grew 35%. Presumably, going into the fourth quarter, revenue should increase remarkably because it's a big advertising quarter. But anyway, it's good to have comparisons. So last quarter, they were growing at 35%. Their active user numbers were growing low single digits.
Now, just to
outlook,
I think it'd be good to just go up just a little bit because it sounds like user growth is important. So that Facebook daily monthly active users, that's just the Facebook website. So both of those are growing at about 6%. And then the family, it's worth pointing out, family means WhatsApp, Instagram, Facebook, I believe, are the big three. And those numbers
would be 3.6 billion users.
Those numbers are crazy. So basically
that's half of the
world. Right. And if you
Yep.
throw out all the old people and the people that are too young, that's like 80% of the potential people that could be using
And
it.
last quarter, they had $58 billion in cash. They were buying back stock. They bought back $14 billion last quarter. But anyway, the outlook commentary is what I was going for.
Mm-hmm.
I did remember that they were going to be changing the way they provide revenue and operating profits. The first segment, Family of Apps, will include Facebook, Instagram, Messenger, WhatsApp, and other services. The second, Facebook Reality Labs, will include augmented and virtual reality and hardware. We expect Facebook Reality Labs to reduce our overall operating profit in 2021 by $10 billion. So they are spending so heavily.
And
anyway,
to be clear, that's why they changed their name, because they think the future is there.
Very much. All right, so we expect fourth quarter revenue to be in the range of $31.5 billion to $34 billion. So this is management's guidance here, and that is in the light of Apple's iOS changes, COVID, macroeconomic, etc. We expect our non-ad revenue to be down year over year in the fourth quarter as we lap the strong release of the Quest 2 during last holiday shopping season. Okay.
And I'm going to assume that's a virtual reality thing.
Yeah, the Oculus 2, that's the virtual reality headset, which is a winning product. I know that people are very popular. So they anticipate their expenses for the year to be 75 billion, CapEx. Okay. And here's the new way that they're going to be recording. Okay, so that's the expectation though. 31.5 to 34 billion in quarterly revenue is what they said last quarter.
I think it's worth pointing out too that while I don't pay too much attention to forecasts, I would give more weight to what management says. Like, I don't care about the analysts. Like, people say that a company misses the analyst estimates. That's totally wrong. The analysts miss the company's results. But management, that's different because they are the ones who are actually doing this every day. So that's
for sure. All right, so quarterly results. We had a solid quarter, says Mark Zuckerberg. People turn to our products to stay connected. I'm encouraged by the progress we made this year in like Reels, commerce, and virtual reality, and we continue investing as we work toward building the metaverse.
And I believe that Reels is supposed to be like a TikTok-like product.
Yep, okay. It's a video product. Yep. Okay, so revenue for the quarter was $33.6 billion. So the range was 31.5 to 34. Okay, that could be problem one. Problem one could be they didn't exceed their expectations. So just note that. Total costs and expenses were $21 billion. That was up 38%, so faster than revenue.
And we also know that they said that so half of that, or no, it's for the year, they're going to spend $10 billion, they said, on Reality Labs, right? So that would have been over there, that would have been $61 billion. Yep. So their revenue would have grown a lot faster. I'm sorry, their earnings or their income from operations would have grown a lot faster than their revenue if they weren't investing in this.
Exactly. So they're spending huge. So this is diseconomies of scale, or this is operating margin in the wrong direction, which you can see right here. So last quarter, their operating margin was 46%. Now it's down to 37%. That's a 900 basis point move in the wrong direction for operating margin.
But
still
they also,
in absolute terms.
And it's important to say they choreographed this. They said that was going to happen. So it's not a surprise.
Okay, so income taxes, their tax rate went up to 19%.
Wow, that's a big jump.
14%. So their net income was $10 billion versus 11.2. So their net income actually declined to $3.67 per share, or $10 billion. Okay, for the full year, different story. So the full year margins went up, earnings went up 36%, revenue went up 37%. So this would be a slowdown, and the financials heading in the wrong direction as compared to the full year.
And again, I would just say, because a big part of it is because of that investment in the virtual reality stuff.
Anyway, that could be problem number one that people are interested in. All right. Let's get to the results. Okay, family daily active people. So someone that uses one of their products every single day. 2.8 billion, an increase of 8%. Okay, family monthly active people was 3.6 billion, an increase of 9%. Facebook daily active users was 9.93 billion, an increase of 5%. Monthly active users increased 4%. So slower growth rates than last quarter, but still growing.
Right. And so I would say, just to remember, in the last quarter, it was 12% for the family and about 6% for Facebook. So yeah, that's actually a pretty
Off of
quick
this,
slowdown.
but still enormous in
Yeah, I
absolute terms,
mean,
right?
people are going to have to start having 10 babies for Facebook to grow the way it used to.
Ad impressions and price per ad. Okay, ad impressions increased by 13%. So the number of times they showed people an ad increased 13%, and the average price per ad increased by 6%. So that's where the revenue growth came from. And for the full year, those numbers were 10%, and average price per ad was 24% increase.
Now, that's okay, but that's not fair because that is based on 2020. The price
Easy
per
comps?
ad probably, yeah, it's totally easy comps. But what I will say is that when we both have looked at and owned Alphabet, which is Google, for a long time, and what typically you see is the number of clicks or the number of ads goes up a bunch, and then the price per ad is actually going down with Alphabet. But the number is growing so much that the price per click going down is not a big deal. It is impressive here, if you look at this, that both the number of ads and the price per ad grew in the fourth quarter, because that's a more fair comparison. People were advertising again by the holiday season last year.
Good caller. Okay, share repurchases. So they repurchased $19 billion of Class A common stock in the fourth quarter and $44 billion for the full year.
I bet they wish they would have waited just a couple more months.
How could they know, right?
They could.
As of the end of the quarter, they still had $39 billion in thumbs up. So hopefully they're going to start cranking through that soon. Cash balance was $48 billion, so that was down, wasn't it? $58 billion?
Yeah, so it's down $10 billion.
So they put all of their money and more into that. Headcount up 23%. Okay, so
that's
let's
a big jump in your workforce.
Let's look at the numbers. Okay, so the family of apps includes Facebook, Instagram, Messenger, WhatsApp, and other. Reality Labs is Oculus.
Yep.
All right, so the 3-month ending. So advertising revenue still is everything financially. Other revenue is a rounding error. So family of apps was 99% of the total. Reality Labs remains, it was up. It was up, but
one other thing I want to point out as we look at this, because we're probably going to see an outlook here, is that you see from the fourth quarter of 2020 to the first quarter of 2021, revenue fell, and that's normal because advertisers aren't spending as much once the holiday season is passed.
Yes, it is a seasonal business, but what you care about there is that it's growing year over year, not quarter over quarter. Okay, so income from operations, $16 billion from their core business, and look at that, $3.3 billion quarterly loss in their Reality Labs. So yeah, they are betting huge on virtual reality. So because of that, the bottom line is what the bottom line is. Okay, we expect first quarter 2022 revenue to be in the range of 27 to 29 billion, which represents 3 to 11% year-over-year growth. All right, I'm guessing that's
what the feel like you're understanding this better?
Yeah, I'm guessing that's what the market does not like, to be impacted by headwinds in both impressions and price growth.
So that's like what I was just talking about.
Yeah. Okay. On the impression side, we expect continued headwinds from both increased competition for people's times and a shift of engagement within our apps towards video services like Reels, which monetizes at a lower rate than feed and stories.
Let's stop and digest that sentence there, because I have a feeling, you know what, I'm just going to take a screenshot of that, because I think that is going to explain a huge portion of what's going on here. So if you're
an Instagram user, there's no doubt they're pushing Reels right hard to combat TikTok.
So Reels is part of Instagram?
Yes.
I'm showing my age here. I'm only 40, but I feel like I'm 60. So they're saying increased competition for people's time. What do you think that means? I know what I think that means, but what does that mean to you?
People aren't using our app as much?
Yeah. Why?
Because there's TikTok competition?
Yeah. To me, that's what it means too.
Yeah.
Yeah.
So reading between the lines there, for
Yeah.
sure. And it's clear if you look at YouTube, for example. YouTube is pushing shorts. Instagram is pushing reels, right? That they want those short videos to be on their platform, and there's an opportunity for them to do so. So anyway, we'll see. Okay, on the pricing side, we expect growth to be negatively impacted by a few factors. First, we lap a period in which Apple iOS changes were not in effect, and we anticipate modestly increasing advertising and measurement headwinds for platform and regulatory changes.
So let's
I've been
talk
hearing about
that.
that for a long time. Apple changed the way that they were tracking people and allow for that. That obviously hurts Facebook's business. So that might be a period of tough comparison that won't repeat in theory.
Here's here's how I understand it. And if I'm wrong, or if someone out there knows better than me, they can correct. But Apple basically said you can opt out of having your data tracked if you're using an Apple device. Mm-hmm. And the funny thing is, and I've read Ben Thompson at Stratechery has some really great commentary on this, because on the one hand, people are like, oh, that's great. Apple's setting us free from all these people tracking us. The flip side of that is that Apple now has a complete monopoly on the data of people who opt out and use an Apple device. So, yeah, I'm not calling it either way, but it's because they no longer have that data. So I will say that change affects one of Facebook's moat, and that moat is their low-cost production, because Facebook can produce data. That's what, remember, Facebook's users are not its customers. Its users are you and me. Its customers are advertisers. And so what they can offer is data. And they have so much data because everybody wants to go on Facebook and connect with friends. But if Apple is all of a sudden withholding it, then that puts a serious dent in the most important moat that Facebook has, which is low-cost production. That's the most important thing that Facebook has. And so Apple doing that, all of a sudden, Apple's like, well, we're going to take some of that.
Yeah.
It'll be interesting to see how that pans out.
Yep. And I did see some that Pinterest was down today. I saw that Snapchat was down today. So I'm guessing they're also responding to that, anticipating similar language coming out. So that's scary. So that'll affect your moat score? Will you take points away on your moat score from Facebook because of that?
Yes. It won't be a ton, but it's going to be something that I got to monitor.
Okay. Second, we'll be lapping a period of strong demand in the prior year, and we're hearing from advertisers that the macroeconomic challenges like cost inflation and supply chain disruption are impacting advertising budgets. Okay, I wouldn't have predicted that. So they're saying cost inflation and supply chain disruption are pressuring their businesses, so they're pulling back on advertising.
Now, here's my question about that. I didn't get to go into Alphabet's earnings, but Alphabet, like Facebook, is a company that makes all of its money from advertising.
Different story, yeah.
But I don't remember hearing Alphabet talk about this being an issue.
Yeah, so this might be a Facebook issue, not an advertising issue.
Yeah.
It'll also be interesting to see what happens to when the Trade Desk reports.
Right.
Will that be duplicated there? Okay, we intend to continue to monitor developments regarding the viability of transatlantic data. Okay, so the European Union stuff. Okay, so they're giving total expense guidance, 90 to 95 billion, down slightly. Okay, 2010 capital expenditures of unchanged, enormous. Okay, ticker symbol change to Meta. The first half of 2022. So they're changing their ticker symbol. Okay. But actually, let's go up and compare. So what was the market expecting on this? So they said revenue is going to be in the range of $27 to $29 billion. So if we go Facebook stock and look it up on, say, Yahoo Finance, the analysis tab. So the market is expecting that. So there's a problem. The market was expecting 30.15 billion, and they said 27 to 29.
Yeah, or even better, just go to the bottom, and the market was expecting 27% growth, and they said their midpoint will be
3 to 11.
7. So think about that. Yeah. They were expecting 27, and Facebook said, nope, 7.
Yeah, there you go. So that is likely. That's the likely cause of the carnage today. at least in my estimate. Oh, right here. So we had the company report $3.67 in earnings. The estimate for the quarter was $3.84. So they missed on the bottom line. Obviously, a whole bunch of that was completely within Facebook's control. They could have pulled back on spending to make that number. So I'm guessing that Wall Street cares more about the revenue, but I mean, as I do. But who knows? Who knows on that front? Okay, so we now have a better story. So of what happened there. Actually, let's go to.
It's really a good, like, this is how, even though Brian Feroldi will do more, he'll look at more information than I do. Like, I know I'm giving a lot of commentary, but that's because this is where we update our stories in our head.
Right.
And we got to see if there's do we need to update the story that we have about what Meta is?
Yeah. By the way, we should have said at the start, the whole point of this exercise is to answer the question, is the thesis for owning this company on track? Period.
Right.
Right. That's the whole point of this process. Is it a green flag? Is it a yellow flag? Is it a red flag? That's why we do this. This is a sign that something is going wrong, but we have to do that work ourselves. So all I did was go to Google really fast, and I typed in Facebook stock, and then I clicked over to the financials tab, and you can see here that Facebook missed on the earnings slant by 4 cents. So they beat on revenue. So Wall Street was expecting 33.44 billion in revenue, and they reported 33.67. So they did beat the revenue estimate. They did miss the earnings estimate. So that's what you call a mixed quarter. I can tell you as an investor, I care more about revenue than I do about earnings, especially given the stage that company is in. But look at the trend. Beat by 10%, beat by 4%, missed last quarter, and barely beat. So either Wall Street is getting more accurate with forecasting this, or Facebook, which historically has a history of vastly exceeding expectations, is having a harder time with the business, and the business is slowing down. Okay, so let's quickly go through the earnings presentation and see what we can get, if we have any unique insights here. So the U.S. continues to be the biggest share of revenue, Europe, Asia, and then everywhere else.
And it's tough too, but what's most useful on those, if you go up just a little bit, is to compare the Q4 to the Q4. Because again, this is an advertising business. So I wish they would just put those two together, but I'm just eyeballing it, and they all moved up.
They all moved up.
Yep.
Yeah. Financially, the company headed in the right direction for the quarter. So these are the totals as a percentage of revenue. So cost of revenue. All right. So gross margin is the inverse of this. So gross margin is 81%. That's flat. Research and development is higher, much higher. Marketing and sales spending is a little bit higher, and general and administrative is much higher on a percentage of revenue. So they really put a lot of capital into general and administrative, as well as R&D. The tax rate is much all over the place. Yeah, but still.
There's not much you can do about that.
Yep. Net income trend has been.
So again, you want Q4 to Q4, so it was down.
It's down because of those huge investments. Same thing there. Capital expenditure, and this year they're going to be spending 20 something. They said, even maybe more than that. So they're spending huge on capital expenditures.
Okay.
Family daily active people, that is flatlining.
So we know that the family was up 8.5. It was up about 8%, I think.
Yeah.
But here is where seasonality does not matter. Because again, Facebook's users are not its customers. What we just went through was its customers. Now we're going to look at the users, and seasonality is not a big deal here. So yeah, I would even expect to see it grow faster in Q4 just because it's colder out in the most populated regions of the world, and people will spend more time on devices. Yeah. That's not much growth there.
No, that's not. So that could be another concern, that they're running out of people that are interested in using their platform. Family monthly active people. Yeah, again, this number has also remarkably slowed down. That could be due to competition. They could be running out of new people to attract. Family average revenue per person. So this
That's
is
great. I mean,
global.
this is good.
939 to 862. So they're currently making about $9.40 per user per quarter in revenue, and that figure continues to go up. Well, how do you keep going that figure up? You either show more ads, or you charge more for the ads, right? That's how you get that figure to go up. So it's gonna be curious to see where this figure trends. Okay.
Ooh,
Users.
wait a minute.
Oh yeah, here we go.
I just saw something.
In the U.S., is this it? Is what you're looking at?
No, go to the top too. So in the rest of the world, they lost 3 million users on Facebook, the Facebook website,
Daily
not
active
Instagram.
users.
Right. So they lost 3 million in the rest of the world. They gained a little bit in Asia. They gained a little bit in Europe, and they lost 1 million in the US and Canada.
Yeah.
And that's in the fourth quarter.
Yeah. So that could be that is particularly exciting. Interesting.
Me, that's the most important slide I've seen so far. That and the Apple.
fact that this has gone down, the rest of the world has gone down.
And to be honest with you, I'm not terribly surprised. I'm about to leave for Costa Rica, and I know that the other platforms are very like Snapchat and TikTok are very popular down there.
Okay. Yeah, that is surprising because a big part of the thesis is where are you going to get more users from, right? It's Asia Pacific and rest of world. And you can see that previously they were growing nicely there. So, okay, that could be the competition, people going on other platforms. Monthly active users also down, flat, up slightly, up slightly.
And what we'll say is that those monthly active users in the rest of the world, that's a huge part of their user base, but it's actually a very small part of their revenue. But it's more about what is it showing something? Are we starting to see a trend that's going to be not so great?
And that's where the future growth is coming from. A big part of the thesis is rest of world monetization goes up to match the US. Look at this. The average US North American user, $60 in revenue.
You're giving Facebook $60 every quarter. So you're paying Facebook $250 per year.
That's more than if you have a Netflix subscription.
Yeah.
Yeah. So you can see consolidated 1157. This is the US. This is Europe. Wow. Even in Europe, that's so much lower than the US. Asia Pacific and rest of world. So a part of the thesis is this and this will slowly creep up towards this, and this is going to keep increasing as well, which we saw. It's really remarkable how far this number has gone, but this is the consolidated number amongst all of them. Okay.
What did it show for free cash flow there? I'm curious.
Was it on there?
Yeah, you just there.
Oh, I'm sorry. So for the quarter, free cash flow was $12.5 billion, and that was up.
It was up significantly, like 30%.
30%.
Maybe even 35%.
Yeah, but what are the sources of that? Because net income went down, so that'll be interesting to see. And we can get that in the we should be able to get that in the earnings release. Let's just dig into that a little bit. All right, so here's revenue. So we know that the gross margin stayed same at 81%. R&D costs up. Marketing and sales costs were up. G&A was a huge jump.
Well, I wonder why.
Interest and expense. Maybe hiring. I know.
Yeah, they said that 27%. Yeah.
Okay. Share count. The share count is down 90 million. Is that 90 million?
Yep, 90 million.
So 91. 90 divided by 2890. So the share count is down 3%.
Wow, that's pretty good.
Yeah. So you now own 3% more of Facebook today than you did a year ago, thanks to stock buybacks. And the company did 19 billion, I think, during the quarter,
and 44.
So here is the offset to that. So they only issued 2.4 billion in stock-based comp during the quarter, and they issued, is that for the year? 9.9 billion for the year, in which they bought back 44 billion. So you still had 34-ish billion of their buybacks are going
billion. Yep.
Just to reducing the share count. So year over year, it doesn't look all that impressive though. But that's either way, share count is heading in the positive for shareholders direction, and year-over-year earnings per share went up quite nicely. Balance sheet. So this went down pretty big. That would be those stock buybacks. Account receivables went up. This is all their CapEx spending. No change to goodwill. Total liabilities is that zero. I mean, their balance sheet remains amazing.
How much cash do they have again? I missed it. I'm sorry.
16 billion in cash plus another 34 billion in marketable securities.
So about 48 billion. That's right. That's what
48 billion plus another 7 in equity investment. So they have more cash than they do liabilities company-wide. But okay.
They have no long-term debt, correct?
Zero.
Yeah.
But payables went up and accrued expenses went up. So that's where the source of some of their cash flow came from. So we should see that. So yeah, so this was net income, stock-based comp, accrued expenses. That's why net from cash flow from operations was that. And even though capital expenditures was up remarkably, still a huge amount of cash flow, of which they used to repurchase a lot of their common stock, 20 billion in the quarter. I can only imagine if they're going to get more aggressive now that their stock is down so big. Okay, should we go to the commentary?
Yes.
Okay. So this is the commentary. If a company does not provide commentary, here's what I do. I always just go, personally, I would go Facebook full transcript. If you do that, you can see the most one to come up. So this is Q4 2021, and you get a free version of the transcript right there. But we'll use theirs because that'll be perfect. Okay. Oh, that's the follow-up call. Okay. This is Zuckerberg. This was a solid quarter for our products and business. It was also an important one for our company. We announced the name Meta when we shared our plans at Connect. I said this is something we're not going to do on our own. The metaverse will be built by creators and developers. It will be interoperable, and it will touch many different parts of the economy. In the months since, it's been exciting to see lots of other companies share their own plans for the metaverse and how experiences and products might show up too. I look forward to partnering with them as we all work to bring this together to life, okay? If last year was putting a stake in the ground, this is going to be about executing. Today, I'm going to discuss 7 major investment priorities.
Wow, okay.
Reels, community messaging, commerce, ads, privacy, he said with a snicker, AI, and of course, the metaverse. These are areas we're putting in a lot of talent and budget. I'm going to touch on our brief Q4 results. We shipped products, our community grow, business of all sizes turn to us. 2 things we're having an impact on our business. The first is competition. Okay, well, there you go. That'll sink your stock right there if you say that. Yeah, we're having an impact. Competition is impacting our stock.
Just to be clear, because I remember I have a background in teaching, and I didn't pay any attention to stocks or the Wall Street, or I still don't care most of the time. But one thing that I've realized is this is all about reading between the lines. Like if someone said, yeah, competition's going to be tough, I'm like, well, of course it is. Like, that's not a big deal. Over time, and this might be obvious to people watching this if you've always been involved in the stock market, if someone talks about competition on a conference call where they've prepared the remarks for it, take it seriously.
Yeah.
Because they don't want to talk about that.
When the management's commentary is usually sunshine and rainbows, everything's going well and that kind of thing. So yeah, so obviously competition is having a big problem here. Yet again, why the stock is falling. People is having a lot of choices. Apps like TikTok are growing very quickly. So calling out a competitor directly. And this is why our focus on Reels is so important over the long term. As I work to make sure our apps are the best service out there for young adults, which I spoke about on our last call. Okay. Side note, do you know Hank Green? You know that
No.
name sound familiar to you? Hank Green is a creator on YouTube, super popular, wonderful person to follow. He recently had a fantastic video on his channel about a TikTok and how TikTok pays its creators by putting like money into a fund. And it splits out that fund equally. Essentially, it's very, very hard for a creator to make money on TikTok, like super, super hard. And that's in direct contrast to YouTube, where YouTube does a revenue share, right? So it's
Yeah.
like 50% of the ad revenue goes to the creator, 50% the company keeps. So that could be an area that Instagram could grab market share if they change their model up to
So in
provide
other
more.
words, they pull the popular TikTokers onto Instagram by saying, we'll pay you more.
Yeah, exactly. Or we'll pay you. Well, yeah.
Right.
So that is an area. So Facebook has the power to do that. And Instagram, last I checked, was still a very popular brand, especially with younger consumers.
So it'd be like Spotify buying up podcasts. They're like, hey, we will buy and you can only present your stuff on our platform.
Anyway, it's an anecdote worth sharing.
Okay.
There is an opportunity there. We're in the middle of transitioning on our own services towards short-form video like Reels. As more activity shifts towards this medium, we're replacing some time in news feeds and other higher monetizing surfaces.
So
as a result of both
yeah.
competition and the shift to short-form video, as well as our focus on serving young adults over optimizing overall engagement, we're going to continue to see some pressure on impressions growth in the near term. Now, I'm confident that leaning harder into these trends is the right short-term trade-off to make in order to get long-term gains. We've made these types of transitions before with mobile feed and stories, where we took headwinds in the near term to align with important trends over the long term. And while video has historically been slower to monetize, we believe that over time, short-form video is going to monetize more like feed or stories than like watch. So I'm optimistic that we'll get to where we want to with Reels too.
I'm gonna
translate that.
Yeah, I'm gonna pull back. And so here's my story that I would explain to someone is that today we live in the attention economy. Because advertising is a huge way that people get paid. You get paid for grabbing people's attention. People's attention used to be dominated by the news feed, which is basically, that's just what you see when you go onto Facebook and they have ads in there. It was easy to get a lot of money on newsfeed, but now people are choosing to direct their attention towards short form videos. And where the attention goes is where you have to go if you're a publicly traded company that makes money on advertising, which is why I'd never want to run a publicly traded company based on advertising. But they have to go where the attention goes. The attention is everything. But you're deciding to give your attention to us right now. That's everything. So if the attention is shifting from one thing which was highly profitable to another thing which is not highly profitable, the thing is, attention isn't multiplying. Let's be clear about this. Just because they can get $50 from the newsfeed attention and $10 from TikTok attention, you can't 5x the amount of attention in the world. So this is an existential issue. It might be worked out in the long run. The problem is that I don't expect to hear Mark Zuckerberg making the argument against it working out in the long run. That doesn't mean he's going to be wrong. He could be right. I just need to hear it from someone who doesn't have a vested interest in it turning out that way.
Sure. And I think that he is right. He did point out that, when Facebook came public, it was desktop.
Yep.
And they made the transition to mobile. And ads were way lower on mobile.
Yep.
And people were like, terrible decision, right? Terrible, This is over. And then ads on mobile have now become equivalent to desktop ads.
Yep.
So what they're saying is real ads are currently like TikTok ads. They monetize at a much lower rate, which makes sense considering that they're mostly 10 to 20 seconds. They're not like YouTube long form. But he's saying that we expect that revenue from Reels to be monetized higher over time, but we're not there yet.
Yeah.
And do you believe him? That's for you to figure out.
That's the story you have to figure out.
Yes,
yeah,
exactly. Our continued success is on building products people find valuable. We're focused on understanding the needs. Okay. Dave's going to share more of these impacts to the business in a minute. I want to discuss our investment priorities. The first one is Reels. It's clear short-form video will be an increasing part of how people consume content, and Reels is now our fastest growing content format by far. It's already the biggest contributor to engagement growth on Instagram, and it's growing very quickly on Facebook too. As we continue to improve tools for creators, ranking for people watching, as we roll out the product everywhere across the world, I guess Reels isn't everywhere then. We expect that this will continue growing quickly. So looking ahead, we're investing in simplifying video across Instagram, building more creative and monetization tools for creators. Don't overlook that. If they can do that, that could be big. and helping more people.
Well, that's what
discover
you were
and
just
interact with
talking
brands.
about, right?
Right. Exactly. And let's point out, you can easily take a TikTok video that you make and port it over to Instagram.
Mm-hmm.
It's very easy to do that. You can do that right in the app on TikTok, I will say, and vice versa. So if you're creating on one, that you would be silly not to create on the other, because it doubles your potential audience size. So out there, just throwing that out there. The next priority is community messaging, which is about chatting with groups of people you have something in common with, whether it's a shared community, interest, or experience. We're already run some of the world's most popular messaging platforms where people connect, and we're seeing people increasingly want to share messages and things they post.
So Reddit.
Sure. I think the popularity we're seeing with apps like Slack in the workplace or Discord reflects this trend. We're going to help people on WhatsApp better organize their group chat and make it easier to find, like parent groups. Okay. I want to call it business messaging. We estimate that more than 1 billion users are connecting with a business account across our messaging services each week. 1 billion users are connecting with a business account across our messaging services each week. So that was their big thought for WhatsApp, was that we're gonna monetize this by essentially like doing company customer service through WhatsApp.
In other words, become like Twilio.
Yes,
in a way
of sorts. We're partnering with companies like Uber and Joymart to help people book a ride and have their groceries delivered right from the chat.
Wait, that's hilarious, because didn't Uber just dump Twilio like a couple of years ago?
A few years ago.
Yeah.
We're building new tools to make buying online better for people and easier to manage for business. We believe this can be important for business years to come. We're making good progress to broaden e-commerce efforts. We already help a lot of businesses reach people. Okay. Introduced shops a year and a half ago to make it easy for people to power the purchasing, discover a new brand without having to switch over to a browser or re-enter their payment information. Yeah, that'll definitely increase shopping. Okay. Cheryl in tuning some of the success we have with the holidays. Okay, ads. With Apple iOS changes and new regulations in Europe, there's a clear trend where less data is available for delivering personalized ads.
Full stop.
People still want to see relevant ads, and businesses still want to reach the consumers. So we're rebuilding a lot of our ad infrastructure so we can continue to grow and deliver high quality personalized ads. So let's point out the fact that the Trade Desk has been making investments in exactly that. And for what it's worth, the Trade Desk CEO saw this coming and has basically said, we're fine. So do you believe that Facebook will be able to do something similar? Maybe. Privacy. We've made huge investment in strengthening our approach to privacy. End-to-end encryption over WhatsApp and Messenger. We're building out major privacy infrastructure. Okay. AI. One of the areas we're seeing stronger return on investments over time than we expected. Advances in AI enable lots of the experience I've talked about. Deliver better ads to people using less data. It's core to our safety, etc. AI is going to play a bigger role in how we work. Help build the metaverse. We just announced our AI research supercluster, which we think will be the world's fastest supercomputer once it's computed later this year. It can enable AI models that can learn from trillions of examples and understand hundreds of languages. Okay. The metaverse. We're seeing real traction with Quest 2. People have spent more than $1 billion on Quest Store content.
Interesting.
That's like their app store, I'd assume, for the Quest, helping virtual reality developers grow and sustain their business. $1 billion on their app store. Okay. We had a strong holiday season. Progress towards high-end virtual reality headset. For software, Horizon is core to our metaverse vision. This is our social VR world building experience. So Horizon, I remember they announced this. This was like a place you can go and hold a meeting with somebody. Okay. This is a huge investment. Yep. You can connect with friends whether they're in VR or not. Yeah. So that was one of the big promises. We're focused on avatars. Okay. Meaning progress, social, intuitive. Okay, so now on to the numbers. Revenue is up 20%. The close of this year also marks the first time our business generated more than $100 billion in annual revenue. Growth. There are a number of dynamic factors that created headwinds for us. We were lapping strong growth, benefited from strong growth in online commerce, which has since slowed.
Maybe that's why Amazon's down so much today. And PayPal.
I think PayPal reported earnings.
Yeah.
Q4 was the first holiday season after Apple's iOS changes, which impacted business of all sizes. This continues to be the factor, especially small businesses who rely on digital advertising to grow. This continued to be the factor in 2022. So that's not good. Advertised about other macro trends, supply chain, labor shortage, and inflation. People shopped earlier in the season.
Yeah, I'd want to go see what Alphabet had to say about it.
Many whom front-loaded their spend earlier than usual. So the ad effectiveness was down. I can tell you, I know a lot of people, myself included, that shopped for the holidays way ahead of where we normally do.
Okay.
Okay.
I'm always last minute, so I'm not a good.
First ads, the iOS changes. Apple created 2 challenges. Accuracy and targeting are complex by introducing tools like aggregate engagements for better insights. They will help to mitigate some of these challenges. Okay. Short form video we saw. Yep.
I want to interject for 1 second. I just went to Google's website and I looked at their conference call and I just looked for the word supply chain and it was mentioned once and it had nothing to do with the supply chain, and inflation, and it was mentioned 0 times. So this is from the other major advertising giant in their conference call brought up those issues 0 times. And that was this week.
There you go. We launched a number of tools in commerce, ratings, checkout stability, etc. Big area, high ROI, product tags. Okay. The laundress. Yeah, I don't care about your example with John Mayer. Police engagement, messaging. Our focus is on helping businesses and consumers connect. The largest monetization effort is click-to-message ads, where you click on an ad in your Facebook feed and it opens a chat with the business in Messenger. It's a great way for businesses to drive engagement. We've seen a lot of demand for consumers want to use it, like utilities, financial services, education, and travel. So that's how they're monetizing it. Click here to talk to the company.
I guess so.
Okay. We expanded the types of information people can choose to receive. Now view catalog on WhatsApp each month, featuring collections. Reels. Okay. Sheryl Sandberg. Okay. We're reporting on different. Okay. Revenue was total year was up 37%. Q revenue was up 20%. We experienced a currency headwind and had foreign exchange. Total revenue would have been about $300 million higher. Expenses were up huge.
All right, I'm reading ahead. You should get to the G&A. It increased 107%.
Okay. Legal-related costs. Oh, there you go. Did they pay some bill?
And employee-related costs.
Yeah, there you go. We added 3,700 new hires, the majority in technical functions.
72,000 employees.
Yeah. Okay. Operating margin declined. That declined. Family of apps revenue was up 20%. Family of apps strong. We saw those numbers. Impressions in North America declined 6%. Impressions growth benefit from ad load increases. Reels. Okay. Pricing growth. Worldwide pricing growth slowed in the third quarter as we lapped strong growth. Pricing was also negatively impacted by advertisers facing challenges. Okay. Family of apps is that. Okay. 2.8 billion people use Facebook on a daily basis. That brought 3.6 billion on a monthly. We saw some of these numbers. Outlook, 27 to 29.
Yeah, this is
3 to 11%. Yep, on the impression side. Expense outlook.
I already read
Going to be spent huge, big capital expenditures. Yeah, that's up 10-15 billion dollars on capital expenditures. Data centers, servers, network infrastructure, and office facilities. This reflects a significant increase in our AI and machine learning investments supporting areas. Okay, tax changing to Meta, etc. Okay. All right. So, what's your takeaways, Brian?
So here's my takeaway. I'm going to go back and I'm in my brain going to look through my framework. So mission, I still give them credit. I'm not sure they do a great job of bringing the world closer together, but it's a good mission statement. Their network effect. Each additional user creates value for existing users. Well, it's tough because they're not getting additional users now, right? That's still a
Or
barrier.
their rate of growth, the rate of getting new users is slowed dramatically. There's no doubt about that.
Yeah, or if you just look at it sequentially, it's flat. So I have to think about that one because that's still something that someone else has to overcome. But someone else is overcoming it. Like they're talking about how just because Facebook has 3 billion users isn't stopping the competition from getting attention. And attention is all that matters. It's all about attention. So are there network effects there still? Yes, definitely. Are they as strong as they were before? Maybe, maybe not. I'm not sure. Switching costs, I never really thought there were switching costs there. I mean, I guess if you leave a platform, you lose something. I don't know. The big intangibles, the brand value, I still think it's pretty much there. Obviously, TikTok is stealing some thunder. They never had counter positioning. The big one, if I were to, I love looking for the needle in the haystack. What's the signal in the noise? Facebook benefits from the network effect, yes, but the key to Facebook, the key to understanding why this company is almost worth $1 trillion is low-cost production. They produce data at a lower internal cost than anyone else can outside of Google. Google has 9 products with over 1 billion users. And so that's how they get their data. Facebook, all of a sudden, the spigot has been turned a little bit by Apple. And it's not just getting turned by Apple, it's also getting turned by people not going to the website anymore to offer up ads. So it's on both ends. So if you think about it, like you need attention in and ad impressions out. The more attention you get, the more data you have, the more data you have, the more you can get for your ads. So the attention coming in is being shrunk by competition and by Apple because they're not able to monitor that attention. And then the ads, the competition is taking away from. So that's where I'm at. Still very strong financially, still very strong in terms of skin in the game. It all comes down to that low cost production. That is the key. If I had to walk away with a one slide takeaway, it would be cost of production. That's
would you on a thesis basis, would you say on track, yellow flag, red flag?
Yellow flag. Yeah. And it'd be like a yellow-green flag.
That's I would do something similar. I would say thesis definitely not busted. Thesis bears closer watching. And to me, for like what I'm going to watch moving forward, subscribers, followers, users, whatever, daily active users, Reels. Obviously, they're making huge investments in Reels. We want to see that eventually lead to higher ad loads. Competition for sure. That's not inside the company's control there. And then the metaverse, right? They are investing $10 billion a year into that, right? That has to pay off for the company to do well. They are betting so much capital on that.
So here, yeah, and I think actually that's where it's. So if I were to add a second bullet point, my first bullet point, cost of production. Focus on that, laser focus on that. That's what's going to get you to the next chapter, which is the optionality of the metaverse. And there's some really good comments here that I think we should get to from Dave especially as well.
Before we do that, let's just check one last thing. So I did pull this up. So last year the company did 13.77 cents in total earnings per share, and that figure was up, but that is the figure, $13.77. The stock today is $240. So let's see, 238 divided by 13.76. This company is trading at 17 times earnings, trailing 17 times earnings.
Did they put the cash flow statement in? I want to see what it is for free cash flow too.
On a cash flow basis?
Actually, if you go, you just had that slide up.
Okay, well, it's 57 minus that. So what's that? 39 billion, and the market cap is 664. So 664 divided by 39 equals 17 times cash flow for a perfect balance sheet, founder-led huge inside ownership, potentially. Anyway, the market is saying we don't think you're going to grow fast at all. They're saying the growth story is over. Is that right? I don't know. But let's get to our wonderful comments. People that know more than us.
In other words, everybody.
Yeah. If all your friends are on Facebook or Instagram, I would say switching costs are difficult. Agreed. Yep.
I would also say that people can exist on as many platforms as they want, though, too.
Yeah. So here's a point about Facebook's forward PE ratio. So let's just make that distinction. So Facebook's, as of right now, Facebook is estimated to do $17 in earnings per share next year, 2023. For the current year, they're expected very small earnings growth next year, $17. And right now, their revenue is expected to remain very high. So the market's saying we expect your focus on earnings next year, revenue this year. Are these right? Are these going to come down? Well, we'll see. We'll see there. But just keep that in mind when you're using forward earnings. I also like using forward earnings, but if the thesis has been altered, that may or may not apply.
And just to be clear, if anybody wants to go back into our videos and see the video we've made about valuation and why we do and don't pay attention to it, to me, this is like, I just care about, is this company more fragile, more robust, or more anti-fragile? If chaos were to hit, how would that affect the company? I think it's in a weaker spot today with the information that I have than it was yesterday, but I still think it's pretty strong.
I think that Michael here makes a really good point. The Facebook marketplace is so underrated, basically has erased Craigslist.
Totally agree.
Also use Facebook. That is one of the major reasons why I still use Facebook.
We get tons of furniture. We get tons of furniture. We just hired a cleaner for the first time because someone's got to clean our house. We found them on Facebook. Like, I completely agree.
Right. So even though I personally don't use it that much, I still use Facebook to birthday announcements.
Yep.
Keep in chat with my extended family because everyone's on Facebook. I use it for the marketplace, and that's I'm not a Facebook power user.
I'll also use it. I'm not a power user either, but I will also use it for small community forums. Like if I want to ask, we live in a small community. Like, hey, does anybody have a recommendation of a handyman or something like that? It's interesting because what we're seeing, it might just be that you and I are about the same age and our patterns are changing, but this has gone from being something about like navel gazing to very practical. Hey, tell me how to clean my carpet.
Yeah. Some people saying screaming buy. Yeah. So if the metaverse pays off for them, wow, could today be a fantastic buying opportunity. Growth doesn't have to be great when they're buying back 40 billion in shares. Yeah. What do they have? They had $40 billion in continued investments. I mean, the market cap is 664 billion.
So they basically spent an equivalent amount of their cash hoard on buybacks last year. They have 48 billion in cash down. Didn't they say they bought back 44
billion?
So that's where they're putting their money right now.
Yeah. So again, they on the one hand, they're spending 10 billion on the metaverse, which is huge. On the other hand, that's a quarter of what they spent on stock buybacks. So I would expect the share count to come down mightily fast moving forward. But that doesn't matter if Wall Street says this growth story is dead. So buybacks are wonderful if the business is still intact. Buybacks are a waste of capital if the company is headed for permanent decline.
And I would say the only way that I would say you and I think differently about it is you said if Wall Street decides that its growth days are over, I don't care what Wall Street thinks because reality will win in the long term. It depends upon where people give their attention. Yeah. But you can only think that way if you're willing to wait 5 to 10 years for things to play out.
Right. Thank you. So many great comments. Dock them. Do either of you dock them for a lack of diversity in revenue streams? We obviously always talk about customer concentration, but to me, there's always the case where revenue concentration can be even scarier. Fair question. Yeah, this company the revenue comes from one line of business, advertising, right? That's the line of business. Same thing for Google. I haven't docked them for that. I would love it if the metaverse was, or product sales, something like that was another major revenue source. But it's also hard to find a business that generates $100 billion plus in annual revenue that will ever be able to match that.
Yeah, it doesn't bother me a ton, but I think what we've got to dig under the surface is why do we care about concentration risk? And that's because of single points of failure. So what we're seeing with Apple is that there is somewhat of a single point of failure there, where a decision made in one boardroom on one day can drastically affect your business. Now, I don't think it's a death knell. I think Facebook's going to be fine, but it's clearly affecting them.
Mm-hmm. Now, here's a question: is Pinterest basically screwed now? We'll see. It's possible that attention could go from Facebook towards Pinterest. I did see that Pinterest was down in response to this. So yeah, I might be wrong about Pinterest. It's a stock that I own, by the way. I also own Facebook. We should be better about saying what we do own and don't own. And I'm not as good at that as you are.
I did used to own Facebook, and when I sold was when I was not, and this is just me, I'm not judging anyone who makes any other decisions. I mean, Brian owns it and I used to, but when the users and the customers weren't the same, I was like, I'm done. And I was willing to make an exception for Google because I just think the tools that they use are so useful.
They really are.
And I don't think that about Facebook.
Yeah. I love this comment by D. Another example of how relying only on traditional valuations and analyst estimates can be a trap. Mm-hmm. Yeah, it's very much the story that goes on with it. Okay. So thank you all so much for watching with. We hope that you learned how we do earnings. So looking backwards, the company exceeded expectations, met its guidance, missed on the bottom line. Looking forwards, the forward guidance was the trouble. But the big reaction, I'm guessing, was mostly Zuckerberg saying Reels is a big investment. It's going to be 2022 is going to be a big investment year for us. We're seeing the effects of competition, and there are reasons for optimism and there are reasons for caution. So to me, like Brian said, if I was to grade this thesis on track, I would say it's no longer a green. It's not a yellow. It's in between those two.
It's in between a green and a yellow. And if I were to 3 bullet points from this hour, 1, the cost of production. That's number 1. And Apple is part of that. Mm-hmm. 2, this bet on the metaverse. They're kind of betting the farm on it. And 3, value-wise, I don't talk about valuation at all, but it looks like a pretty good deal right now.
There you go. All right. Thank you so much. We will be back next week with a stocks from scratch. So we look forward to seeing you then.
And as a quick programming note, I will be gone the next 2 weeks because my family will be on vacation, but Brian will find someone to fill in for me.
Don't worry. I know another analyst named Brian that will be joining you in your space.
That's the rule. You got to be named Brian.
All right. See you, fellas. Bye, everyone. Thanks so much for watching.